Hello, chart watchers, and welcome to this Wednesday, January 3rd, 2018 edition of Market Watchers Live with Aaron Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so you'll have roughly 24 hours to review. If you'd like to review an older show, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, we'll select stock symbols from your requests and use those in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, please let us know your feedback. In the lower right-hand portion of your screen, you'll see a How Do We Do section with a link to a very brief one-question survey. Let us know what you think of Market Watchers Live and provide us suggestions for improving the show. For those of you joining us for the first time today, welcome to the show. We are certainly glad you're with us. And for our regulars, welcome back. A couple of quick announcements before we get going today. Bill Shelby is in the house with us today. So we'll be going through an everything stock chart segment with Bill. Aaron will be conducting a workshop on decision point scanning this Friday. So just 2 more days, mark your calendar. And next Wednesday, we're getting a return visit from Bruce Frazier. He'll be on the show with us, and I'm sure we'll be taking a look at some of the things that he likes for 2018. Always a good idea to get different opinions from different folks. So looking forward to getting Bruce back on the show. And with that, we're going to get into today's action. How are you doing today, Aaron?
I'm doing quite well. It's pretty nice out here in Southern California. I feel kind of bad for all of you out there, just about everywhere else.
Yeah, you get all that warm weather. We've been getting freezing weather. I think Mother Nature has forgotten that we're in the southeast. There's that south part because it doesn't feel like it. So we're going to bring in the tiebreaker on the weather. Bill, how are you doing, and how are things out in Seattle?
They're looking pretty good. We got clear and cold. It's we're looking out the windows, and I, oddly enough, don't see a single cloud, and it's probably about just above freezing up here.
Oh my gosh, yeah. Well, we've got some really low temperatures. I mean, I'm in South Carolina, just a little south of Charlotte, North Carolina, and temperatures here yesterday morning, I think, was 11 degrees when I went out this morning. It was a heat wave. We went to about 17 this morning. So,
wow.
But that's pretty chilly for these parts. So I'm not really used to it.
Yeah,
but what is not,
we do pay for it here in Southern California.
Yes, we do.
So.
You know, it doesn't really matter where you are, unless you're in San Diego, where it seems to always be nice. You know, you always get something to kind of bring you back down to earth. But I know it's been chilly here on the East Coast, but the stock market has not been chilly. It's been pretty hot. So we're going to get into a bunch of stuff today. But first, I'll let Aaron go through the agenda with you, and then we'll get into that first market update.
All right. So yes, Wednesday, we're starting, of course, with everything stock charts with Bill Shelby coming up. We're going to do a scooter report for you. And I know that Tom's going to look at the Nasdaq 100, and I'm going to look at the big scooter movers up and down. And the 10 and 10 to 1, our very first 10 and 10 to 1 symbol will be Regions Financial, RF, if you want to go take notes before that segment. And then we have Anatomy of a Trade. And I don't know, I actually have a real life trade. Usually I don't trade that often. So it'll be nice to actually have one that isn't just an educational pick. So looking forward to going over that. And with that, it's time for our first market update. So let's get right to it. All righty. So I'm going to start with today's alert headlines. The way you get to this, I'm going to just show you very quickly, is you come down here to here are predefined alerts, hit view all. And there you go. You can look at today's, you can go to the past ones and see where what headlines appeared. But today, more headlines than I could put on that first page. So I decided to go in here and look at what all of them are. Of course, they're all green bars, so that does tell you that we're seeing a lot of bullish behavior. And you can see energy is picked up, healthcare is picked up, and materials as well. Oil set a new 2-year high. I think that's an important to note, and I know we'll probably be looking at USO later. S&P 500 set another new all-time high, and of course the TSX has also set a new all-time high. So let's look in particular at our candle glance and see what's happening today in particular. All right, and as you can see, another fast and furious start for most of the major indexes. And really, as with yesterday, we're starting to see pullbacks and consolidation. For example, on the Dow, yesterday we had that big pop up. You can see here in the morning, and then it pulled right back down. So we're kind of looking at the same thing right now for the Dow Industrials. At this moment, they're pulling back and have already given back about half the gains today. Whereas the S&P 500 did set a new all-time high, but it does seem to be consolidating just under that particular resistance level. And we could see that the Nasdaq isn't pulling back too far either. But look at the small caps here. Russell 2000 had a nice start going along with the rest of the market, but is now pulled back and is actually lower today than yesterday. Wilshire 5000 looks very similar to our S&P 500. You can see Treasury yields are currently moving down. We're looking at 24.42. UUP, big gap up, nice rally, and similar to the Dow, we're seeing a major pullback here, giving back again half the gains. It looks like commodities are going higher. I do see a rising wedge here though, and that could be dangerous. USO started with a gap up, has moved higher. It did pull back slightly and is now getting ready to move even higher, it appears. We'll check on that at the end of the show. Gold is down slightly, but it does seem to be making a move back to positive territory. Currently, GLD reading at 125. And the VIX is moving lower again. So we're looking at a 9.22 reading for the VIX. And this is, very bullish thoughts going on with investors right now in the market as this gets even lower. Usually I remember back in the day, it was a big deal when you had the VIX below 12. And now we're looking at readings well below 10. So I think that's fairly interesting. Anyway, here is our market summary so we can get a peek at our sector spiders. And consumer discretionary and consumer staples are at the top currently. The only spider in the negative right now are the utilities. The utilities ETF, which is down almost 0.5%. As far as industries, airlines, banks, biotechs are leading the way. And the only two industries that we can see on here that are in the negative are transports and utilities. So not surprising when you saw the spider was hurting there. So as we can see, as far as international ETFs, EFI index ETF is the leader. Emerging markets ETF is also near the top. We can see that the UK is the only international ETF that is currently lower. And with that, I'm going to pass it back to you, Tom. I know we've got Bill waiting to go over some really interesting information.
Yeah, we're going to bring Bill in here in just a couple minutes. I want to go through and just follow up on a couple of things that you had talked about, and also just take a look at some of the economic reports that came out this morning, because we did have a couple more. So first, as I like to start with, the 10-year Treasury yield. Make sure I'm get a current chart here. Update this. You can see right now the 10-year Treasury yield is down to 2.44%. So it's down a couple of basis points. But the general uptrend remains in play. And I think that's the key. We're going to fluctuate back and forth. We got a couple of pretty good reports out again this morning. December ISM manufacturing. If you remember yesterday, we had a manufacturing report that came out pretty much what the market was expecting. Today, a little bit better. The December ISM manufacturing came in at 59.7. The market was looking for 58.1. And then November construction spending, also released at 10 a.m. this morning, came out with a rise of 0.8%. The market was expecting 0.6%. So a couple more solid economic reports. And I think as long as we continue to get these types of reports, I think the market's going to continue to react the way it has been with rising Treasury yields. And I think that also reflects the Fed's desire to raise rates in 2018. Speaking of the Fed, the FOMC minutes will be out today at 2 p.m. So traders will be looking to see if there anything new in that in those minutes that are released, maybe to account for the possibility of future rate hikes in 2018. So those are some of the economic news, to consider. I did want to mention a couple of things. You were talking about the Russell 2000, Aaron, the fact that it had gone negative.
Mm-hmm.
While the Russell 2000 tends to perform extremely well in the month of December relative to the other indices, that is not the case in January. So I pulled up a chart here. This goes back 20 years. And what this is, it's a seasonality chart, and it's comparing the Russell 2000 to the Nasdaq over the last 20 years. And you can see that the Russell only outperforms the Nasdaq 35% of Januaries over the last 20 years. So that would be 7. And the average return of the Russell 2000 is actually 1.2% below that of the Nasdaq during the month of January. So while the small caps you can see tend to strengthen relative to the Nasdaq at the end of the year, that's not the case as we begin the year. So maybe we're getting a little bit of a pullback that we tend to see historically. The good news, if you're in small caps or you like small caps, is that starting in February, small caps do really well February through May. And you can see on this, and actually June here, the February through June period, it has outperformed the NASDAQ on average over the last 20 years in each of the next 5 months after January. So we are entering a pretty decent period for the small cap stocks, at least on a relative basis, and we should keep that in mind. Getting into a couple of charts here. First, I wanted to bring up the utilities. Utilities have really struggled with the rising Treasury yields, and you can see today, even with the yield falling back today, the XLU is still moving lower and has actually gone below the September low that we saw. So, my first glance at this, and you can see the volume, and I normally don't pay a lot of attention to volume on ETFs, but I think it does show you, or at least it's starting to paint this picture that money is, rotating away from this group. We're seeing a lot of distribution in utilities, and this potential breakdown is not going to help. But when I scroll out, take a look at that weekly chart, the longer term, bigger picture, you can see that we've still got a rising trend line in utilities. And yes, we have been weak for the past 5-6 weeks, but the overall uptrend remains in play. And this is important because bull markets are encouraged and sustained by continuing movement to the upside in wide, in terms of wide participation in a lot of different areas of the market. So I would not be looking at this long-term chart and thinking bearishly about the utilities. But short-term, there's no question that when yields are rising, money tends to move away from the utility group, and I think that's what we're seeing. Technically, you can also see on this weekly chart that the last 3 highs that the XLU has put in, take a look at the MACD, which has been lower. So this trip down to the 50-week moving average, to me, is actually getting us a reset on that weekly MACD back down near the center line, and also approaching what I think is really solid long-term support closer to $50. And, so I wouldn't necessarily be too upset in this space if we were to lose, say, that 50-week moving average. We saw that back in 2016, and we also saw it as we consolidated throughout 2015. But the overall uptrend here remains in play, and I think that's the big takeaway. The technology ETF, the XLK, trying to make a breakout today. Now, this is one that had that negative divergence on the daily chart back in November. You can see that lower MACD with higher price action, but we went all the way back down to the 50-day moving average, got close to the center line for a reset, and to me, it looks like we're beginning this move to the upside. So I think a breakout here on the XLK would be very bullish for equities, and I think the 2 industry groups to really keep an eye on here are the internet stocks, which is the DJUSNS. Check out the breakout here above this recent double top. I think that is very bullish if it holds into today's close. And then, of course, the group that had been leading technology and had a super 2017, but really ran into some troubles in December. This is the Dow Jones US Semiconductor Group. And check out, we are trying to get above that December reaction high. If we do, I think we have a shot to get back up around that 3,400 level and test that November high. That too would provide some really bullish momentum for the technology area. Final thought that I have before we bring Mr. Shelby in is I want to take a look at the Dow Jones. It's really amazing how these 1,000 point increments are being taken down rather easily and rather quickly as well. But if I pull up a 6-month chart on the Dow, it was back in September that we cleared the 22,000 level. October, we cleared the 23,000 level. November, we cleared the 24,000 level. December is not part of the 1,000 point club. We didn't quite get there in December, but we are knocking on the door on the Dow right now, 25,000. This has been a very, very impressive move to the upside on the Dow. I mean, when you think about the Dow and the size of the companies that make up the Dow, you wouldn't think that these companies could move quite this fast. But I think what it's telling us is that the market is anticipating some really good things globally, and these multinational companies are participating in a very meaningful way. So with that, I'm going to bring in Bill Shelby. Bill, I know you've got some things to go over with everything stock charts. What do you got for us today?
All right, let's see. Let me get see if I can get my screen shared here.
What do you think about these 1,000 point moves in the Dow?
Some of it is, the percentage. You get a bigger number, it's easier to go up, right? I mean, it's easier to go from 101,000 to 102,000 than it is from 1,000 to 2,000. I mean, on a percentage basis.
Hold up, is 101,000? Is that your prediction on the Dow this year?
Yeah, let's go with that. See how close I get. If I get it, I win the Ferrari, right?
You can pay for the Ferrari.
All right. Well, if it's at 101,000, I will happily pay for that Ferrari. But yeah, it is interesting to see it go that quickly. And one of the things we're going to maybe do is resurrect some of the stuff that you and I talked about a few years ago when I was on the show. And we'll do that after the predefined scan. And we'll maybe take a look at some of the things we were looking at a few years ago to see kind of how they're doing now and see what type of a market we've got now relative to, say, 2015, 2016. But
everyone, you do not want to miss this either. It's really great stuff that Bill presents. So, but we'll get into that after you go through the scans. What do you have for us today?
Yeah. So I just thought I would jump in with something that we've had on the site for quite a while. It's available for free users and obviously subscribers. There's a couple extra features if you're a subscriber. Scans are an interesting thing. I find them extremely useful. Of course, I write the scan engine, so I'm quite familiar with it. But if you're not used to the scan, then I admit there's a little bit of a learning curve for it. One of the things you can do to sort of put your foot in the water is to look at the predefined scans. And maybe you've got a resolution this year to learn something new on stock charts. And I would suggest if you don't already have scanning on your list, it's a very useful thing to have. So we're going to look at the predefined scans. We're going to see where we get to, how to get to them. We're going to see we've broken them down in some categories, how you can save the results if you're a member, and even edit some of the criteria to see sort of what's underneath the hood there. We can search scan results, and then we can play with some date ranges. So let's, without further ado, we'll jump into that. So here's our standard dashboard, and I'm amazed. Like, I just have to reiterate this as well as Aaron said. I don't think since we put this dashboard in, I'm pretty sure that I've never seen the entire 10 rows of the predefined alerts all green on the same day. So that is a pretty substantial signal just in itself right there. So we got a couple of different ways we can get to the predefined scans. We can go to the control center here. We can scroll down to the analysis and tools. We've got a predefined scans link there. And if you've got scans turned on, the scan row, alert row in your dashboard, we've also got predefined scan link there. So we can take that. And here's the main page. And you can see if we scroll down, we've sort of broken this into three areas. We've got technical indicators, candlestick patterns, and PNF patterns. And then within those groups, we've broken them into sort of bullish signs and bearish signs. Here's all of our standard triple top breakouts and breakdowns are in the bearish area. And then we can just get a list of the number of items that happen to be falling into those buckets every day. Or here we've got them listed by index or exchange, and we've got a section for mutual funds. In the candlesticks, we have a number of bullish and bearish reversal patterns. We've got Dr. Alexander Elder's bars. We've got the Ichimoku cloud going in and out of the cloud, a number of different variations there. And then in the technical indicators, we've got fairly common sorts of things you would see in overlays. If you're charting, we've got crossovers, the MACD, the moving averages. We've got all sorts of channels like Bollinger Bands and prices and Keltners. And some other technical indicators there. You can see like the ADX and the Arun and whatnot. So it's a pretty broad selection of things you can be alerted to. I believe there's roughly 70 scans that we run here on this page. And they're run about every 3 to 4 minutes during the day. You can see here we're doing an intraday. This is the last time it was run. This is Eastern time. This will update every 2 or 3 minutes, 4 minutes maybe. And we'll break it down. We've got today, we've got a lot of new highs. We've got 879 highs today so far. The green bar tells us that we have more highs than we did yesterday. And if we go hover over that, we can get an actual number. So that means yesterday we had about whatever that would be, 780 highs. Today we've got 879. So we've got 100 more highs today than we did yesterday. We can see some of these numbers. We're having a pretty decent day today, but some of these numbers showing red means that actually yesterday was a fantastic day. So even though we were up today, yesterday we were up a lot. So you can sort of even just look at the color of these bars and get an idea of what the market's doing. A lot of the times you'll come in and you'll see the bullish are all green and the bearish are all red. That sort of gives you a clue right off the bat that we're having a pretty good day. If you'd like to go into specifics and narrow it down a little bit, you can go into any of these exchanges or the mutual funds. And to do that, you just click on the number there and you'll get the scan result page. For those of you who are familiar with scanning, it's very similar to the custom scan page. We've got our table that's very common. It's very similar to the scooter table and other tables. You can type in a search term here and pair your results. You can hide columns. You can change the number of rows you see in each column. That's all pretty similar to other tables that you'll find throughout the site. You can sort. We've sort by symbol by default, but you can change this to whatever you'd like. We've got a couple of features that are available if you're a member. Similar to the custom scans, if you want to save the results into a chart list so you can look at them later, you've got a few options. You can create a new list. You can merge into existing, or you can replace an existing. And finally, you can just download this to a comma-separated variable file, a text file that you can load into Microsoft Excel or Google Docs or some sort of spreadsheet. If you want to do some additional analysis on this, you can do that. And this goes back to the learning portion of the topic. If you want to see what's sort of under the hood, you can click here to actually go to the scan engine editor and see what we wrote to get those results. So if you're looking to try to learn a little bit, you can just sort of look at these and start to get an idea of what our scan language is. And that's probably the toughest part about getting into the scans is kind of learning this language. It does take a little bit of time. There's a lot of help out there. We won't really dive into that now because it's a huge topic on its own, but I'd really suggest that this could be a fairly good payoff for you if you wanted to spend the time on it. So,
hey, Bill, I got a question there. Just
sure.
looking, I think maybe some others may have a similar type question, but if you, you can start with this since, the scan engine obviously already recognizes this as a viable scan and has come up with the results that you showed. If you say, this is all the New York Stock Exchange stocks, but if you wanted to limit it to a particular area, you could then go in and just edit this scan that's already set up, right? I mean, I could go down to like the sectors.
I could go in and say, I want to, I can go to just the Dow or the Nasdaq or the small caps, mid caps. I can go
maybe just energy. With energy being so hot, you can maybe develop energy stocks.
So a lot of times, what I'll do, and this may be another topic we can do another time, is for scanning. Is I will maybe go to, like you do, the sectors, the top sectors, and I'll say, okay, maybe do a 1 month chart and say, okay, what's the top 3 sectors? I really only want to look at the stuff that's really performing well. I can come into the scan engine and say, okay, here's something I want to see, but limit it to these top 3 sectors, because I don't care if maybe pick one. Industrials maybe is doing relatively poorly. I don't want to scan for industrials because why, go for something that's not the best of the best? So that's the power of the scan engine. You can really do a lot with this. So and maybe we should maybe schedule another talk on the scan engine at some point. One quick note I will show on this. This clause here is something that's in all of the predefined scans, scan results. We only report stocks that have a daily volume above 40,000 in the predefines. And that's just to sort of weed out the penny stocks that don't trade much. Trust me, if we took this out, the number of stocks that we would have on our summary page here would be huge. So we're just using that as a filter. So that's pretty much true across all of our predefined scans, that we limit it to stocks that have a reasonable amount of trading volume. All right, so coming back here, another feature that I kind of find handy is the ability to search. So if you're interested in a symbol, you can type in a symbol and hit search, and it will tell you which of our predefined scans that symbol is showing up in today. This is great for a couple of reasons, or a couple of uses. Is I will often use this for stocks I own, just to sort of get a feel for, is it showing up on a lot of bearish scans? Is it showing up on a lot of bullish scans? It just sort of gives me a feel for how is this stock doing. If I do a search and it shows up on 9 bearish scans and I own it, I think, well, maybe I need to go to my alerts and put some stops in that a little bit closer. Maybe I need to go to my dashboard and put it on my chart, one of my chart lists that I can see, because I want to keep an eye on this guy. If I'm looking to maybe buy something, I can type something and say, well, okay, here's another one that I should have bought last week. I'm pretty good at finding those. It's a great way to just do a search and see what that stock is doing. So that's a nice little feature. And finally, we can choose the dates. I mean, we default to the current date, but we can go back as much as 5 days and see what happened then. So if we want to get results from 4 or 5 days ago and see what happens, or we want to do a search 5 days ago, we can go and find out what sort of action was happening a few days ago. Some people love the idea of when they have a breakout, they expect to sort of, you're familiar with IBD, you have this concept of the cup and handle. After a breakout, you maybe see a little bit of a drifting lower and you're hoping it's on low volume. They've shaken out all the weak hands and there's not a lot and you're expecting an upside move. A couple people I know use this date feature as a way to go find those, because what you can do is say, okay, if something broke out 5 or 6 days ago, maybe I look at it now and see if it's gone through that process of shaking out and coming back, instead of saying, okay, I saw one that happens today. Now I got to set a reminder from 5 days from now to go back and look at it. You can look at what broke out 4 or 5 days ago and look at to see if any of these. So let's see. I don't know what's going to happen here. Probably nothing. We've got, these guys had some bullish crossovers 4 or 5 days ago. And we can go and see what's happened to them since. Sometimes we'll see maybe this guy is obviously quite wild. We can maybe find cases where we've found that person that's got the cup. It's broken out. Now it's come up above the cup handle and it's starting to accelerate up. So that's one use of the date feature. If you want to go back and try and find things that maybe have had new highs, or if you're into the PNF, you can go down and find things that had breakouts a few days ago and see if they're continuing to break out. So that is sort of the predefined scans. It's a very useful feature. And like I say, it's a great way to sort of, if you're not used to scanning, sort of dip your toe into it, because it is a really powerful tool on the site.
Yeah, that was great information. I actually didn't realize that you could do that symbol and find out which scan or which indicators.
Yes, that's that's a very useful thing. I don't do it as often as I should because time is limited. But if you've got some time, and maybe if you don't own 50 stocks individuals and maybe you own a handful, you can come in here, every couple of days and you can select the date thing really quickly. So if you don't have time, you can easily just check out whatever symbol you own for the last 4 or 5 days and sort of get a feel for what's been happening to it. And if it's starting to, this will maybe show you that something is starting to sort of change its tone. If it starts to go from a lot of the bearish ones to maybe nothing, and then it starts showing up some bullish ones, you can, that tells you something.
Mm-hmm. Yeah, no doubt about it. I mean, this is a great tool. And I know sometimes when I set up my own scans, I will start with these predefined
Mm-hmm.
and click on that area after you've pulled up your predefined scan, click on that area where you can edit the scan.
Right.
Because a lot of the groundwork's been laid. I mean, it's like, building a house and saying, someone else comes and lays the foundation for you, and all you got to do is put the walls up. I mean, that's a pretty cool feature to be able to use as well. Great information. All right. Well, I know we've got some. I want to, I asked you if you'd stick around for a little bit because maybe a lot of the folks in here don't realize it, but you used to host my show for me a year or two ago when we were doing the Trading Places live shows.
Right.
And you would come on from time to time. I mean, you were part of the show, and you had some charts that you showed that I thought were awesome, and I really haven't had you explain those to me in quite some time.
Mm-hmm.
But you had a unique way of looking at some of these charts, looking at breadth.
Right.
Of the market moves to the upside, downside, whatever, and just kind of give you some hints on the strength of a move to the upside. How are those charts looking now relative to what we had looked at a year or two ago?
It's kind of interesting because I hadn't actually looked at these in quite a while. So we were talking before the show, and you asked if we could do this. I quickly ran to my desk and tried to find them and try to put my mind in the mindset that we had in the market a couple of years ago. And so we're going to see what we can come up with here. I've got 4 or 5 charts that I created at that time to sort of try and get an idea of what the market was doing as a whole. So these are all sort of 10,000 foot view type things. You wouldn't want to put a lot of stock into little moves. These are sort of big moves that you want to see. So one of the ones is the NYA above 200-day moving average. So this is all the stocks. This sort of purple mountain here is all the stocks that are above their 200-day moving average on the NYA. So that's roughly 3,500 stocks. That's a pretty good sample. So our scale over here on the left is the percentage. And we're going from about 55 up to about 76. We're currently around 73.5 or so. And then I've overlaid the actual NYA index over here. And then the scale is over on the left. So we can see we're up around just under 13,000. We started down here at about 11,150. And what we're sort of looking for is big cases here. We can kind of see that over this period of 3 or 4 months over in the summer, we're getting a sort of a steady decline in the number of stocks above their 200-day moving average. We went up from maybe 76% down to 66% or so. So we got a 10% move. So that's maybe 350 stocks had flipped from being above their 200 to below. And yet at the same time, the index itself was continuing to go up. And what we had seen, and I'll do a wider view here, is that over time, if we get this sort of long multi-month divergence, eventually it sort of snaps, and we finally do get a plunge, and it eventually pulls the index down itself. And what I had done with these vertical lines or horizontal lines is that we can note sometimes will be a certain percentage of stocks above the 200-day moving average, and the index it'll be at a certain value. We'll go through a shakeout, and then we'll be back at the same percentage, say like at this volume here. So we're at 67%. We were at 67% here. We saw the index actually drop quite a bit. Now we're at 67% again, and the index is quite a bit higher. So sometimes this will show us that there's a smaller number of stocks keeping the average higher, while a larger number of stocks that are kind of behind the scenes are starting to fall over. And that's just an interesting to see, again, at a 10,000 foot view, is the index continuing to go higher, but fewer number of people are participating in the growth. And at some point that, for quite a while here, that didn't really matter, but at some point we may see a pretty dramatic drop off. So let's go back and look what we were looking at, say 3 or 4 years ago, and can see the difference. So this is, Tom, when you and I were doing the show, and you can see there's quite a bit of volatility here. And we were looking at some fairly large swings from down to 15% in the late 2015 to 2016 time period. Again, we were starting to see some divergence here, and then it just fell off a cliff. So it's again, so if we take a larger look here, we've got slow divergence, yet our market was continuing to climb. We did have some little pullbacks, but then eventually we got a snap, and it just sort of fell apart, and we had a pretty decent drop. I mean, we took the index itself from 11,000 down to to 9,000. So, that's maybe a 15% drop or so. So eventually this does catch up. Since then, we've been pretty much on a tear. We've got up to 80%. Another thing I've noticed is that on a several year chart, maybe we can go out even a little bit further. When we get up to this range of about 80% above the moving average, that's pretty much our high. And this is sort of an anomaly because 2009 was so bad with all of the stocks below the 200 moving average that by the time the index took off, we had a very quick pull of those stocks above their moving averages. So that was sort of an anomaly in the last 10 years. But if you look at the last, say, 6 or 8 years, we've pretty much topped out around 75, 80, and we're just right coming up to that. So some of these breadth things, as I looked at them, and we'll go through the rest of them here, is I'm starting to see us. We're looking much better. We're on a consistent run up, but we are starting to push some of these areas where historically we've seen it take a pause.
Mm-hmm.
This is an advancing issues. This is just a triply smoothed average of the advancing issues. Again, we had end of 2016, we had a pretty good swing, and a little bit in the end of 2016. 2017 is pretty muted. I mean, it's relative to the swings we had here, which means that we're having a nice steady advance. There's not a lot of volatility. I mean, we can look at our VIX at all-time lows to show that, our volatility, it's just been on a pretty calm march up, which is what we love. I mean, 2013 was the same sort of thing. We'll go out here again and we'll put this in a little bit of context. If we go back all of the past several years, we can get ranges way down minus 2.75, 0.275. If you look at the ranges we've got here in 2017 relative to these, it's roughly half. Our lowest lows don't go anywhere near the lows that we had in the last 5 years, but our highs aren't going up as either. So that means the volatility, the amount of swinging is less. So again, it's a nice steady march up. You can see here, it's just a perfect lineup. We had just a couple little blips, but nothing bad. I mean, we had some major, this is maybe our 15% drop or so, accompanied with some high volatility on the advancing and our index dropping down. Since then, lovely march straight up. This is the volume of the advancing. So what you want to see when you get advancers is that there's a lot of volume. This is kind of a wild chart. So I put a 50-day moving average on it to kind of calm it down. And I'm going to go to our opacity and turn it to 0, which will get rid of all that noise and just show us an average. And it's, as charts go, it's a pretty boring looking chart, really. It just goes sideways. We've had a fairly consistent, we haven't moved, 100 points all year in terms of this moving average of advancing volume. And we've had, again, a nice march up. If we take this and look at it in comparison to what you and I were doing a few years ago,
would you find that to be a warning sign?
To me, it says there's no volatility. It's a nice steady amount. The thing that I am seeing in some of these charts, and we'll see another couple here that is making me curious, is that we're pushing the points where some of these large participation numbers are hitting points where previously we have rolled over. And that chart you showed saying we're knocking off 1,000 points in the Dow every month, that does give you a little bit of pause to think, well, this can't go on forever. As much as I'd like to see my Ferrari at 101,000, I'm not buying the tabs for it yet. But it is historically in the last year or so, that was a very calm upward rising month or year. This is what we were looking at a couple years ago. We were seeing these divergences where we were seeing the index continue to go high, yet the advancing volume was continuing to drop. And after a while, it would snap back. We eventually did see the market pull down. At the exact same time, the volume started to go up. So this is sort of a leading indicator. Again, we had some upward movement here. We saw the volume getting wilder. You can remember pointing out that this channel was double or triple the size of this channel. So it started swinging pretty wildly in 2015. And eventually we saw that drop where you got, again, I don't know the number here, but it was 2,000 points out of 11,000. So we're 15, 16, 18% drop off in the NYA. And then we saw some pretty wild swings again in 2016. And then 2017, it calmed down, and the March went up in a very orderly fashion, which is what you really like to see. A little volatility, not a lot of crazy moves to one side or another, but it's just a nice slow march up.
Mm-hmm. And I just want to remind everybody too, or actually maybe just tell everyone, that you're going to be providing these charts in the Market Watchers Live recap blog that they're going to go to Aaron. Aaron will have those in that blog recap later today. So for those of you that are interested in finding out the settings and so forth, once that's provided there, you can click on charts within blogs and be able to look at the settings and, if you want to follow any of these charts going forward.
Yeah, I'll send these over to you guys after the show, and we'll get them out there. I believe this is the last one, but this is the bullish percent index on the NYA. Again, it's a fairly large index, 3,400 stocks. The bullish percent index is basically the number of stocks in a group that are on a PNF buy signal. So it's again, a broad range of what is basically in a bullish mode. And you can see again, 2017, we had a smaller range than 2016. We're at 72% now. We only dipped about 58. 2016, we got down to under 25, 23 maybe. So our range again, much smaller. And I'll go out to 3 or 4 years here, 5 years maybe. And again, showing that 2014, 2015, even 16 on a percentage wise is quite volatile. I mean, we saw ranges from 75 down to 20 something. So, and in all of this was a sort of a downward trend. Was again, we had a market that was holding on, but under the covers, we were sort of seeing a slow deterioration. We had to get some some pullbacks, but the general direction from the middle of 2014 to basically early 2016 was down. And eventually it added up. We eventually did see a significant pullback in the NYA. We bounced off it quite quickly, and it's been going up ever since. But this is another point, like I mentioned a minute or two ago. We're right at this point here, 72.5 over the last 3 or 4 years especially the last 2 years, is about as high as we've been able to get before we can see a pullback. Now, we've had a pullback here, but in the last part of 2016, it wasn't a significant move on the NYA, but it was just probably several hundred points, almost 1,000 points. So it's 5, 6, 7% pullback. So looking at these, I would start to, between, like you were saying, the 1,000 point a month move and some of these breadth indicators getting up to historical points where we tend to see a reversal, would give me pause. I would be watching these a little bit closer, sort of in the back of my mind saying, if we get into February, March, we start to get maybe a little bit towards that weaker season of the year, we could see a 6, 8%, 10% pullback.
Mm-hmm. Yeah, and I guess looking at that chart too in 2017, Bill, I mean, the high that you saw, it looks like maybe in March right there.
Right.
And the drop that we saw throughout the summer months all the way down to September, even though we're seeing that decline, you can see that the market continued moving higher. And I guess that's what that's telling me, is that the strongest of the strong
right,
were enough to carry the ones that were starting to
exactly
fall apart. And we just never rolled over like we did back in 2014 and 2015, where everything started to kind of fall apart. So maybe it's a little bit of a warning sign when you start to see this coming down, but I think maybe the conclusion is that there isn't just one chart that you can look at to tell whether or not the market is going to move lower or higher. I mean, it's really like I always say it's like putting together a puzzle. And I think this is an important piece of it to take a look at, see what's leading, and, how much of the market is actually following to the upside. I think that it can give you some really nice warning signs, ahead of time.
Right.
But, none of these charts by themselves are going to, that's not going to be the holy grail. You're not going to have, okay, this means that the market's going to be down 20% next year. I don't use the charts for that. It sounds like
there isn't a chart out there like that.
I know. That's what I'm saying. If there was, we'd all have it, and then it wouldn't work, right? So
exactly,
there's a bit of that. But it is a good point you brought up, and I remember we were talking about this in this 14, 15, 16 ranges. Is what this can show is that the index continues to climb, but some of these breadth indicators are falling over. It means the market is being held up by a smaller number of stocks. Your maybe Apple was doing really well, or last year, we had semiconductors, or where there's certain areas that are doing extraordinarily well, but the average is starting to roll over. And sometimes that's fine. We sort of, maybe it's a consolidation. We eventually kind of work through it. And those other companies that have sort of struggled to have the same performance as some of the top people, they eventually come around and we continue up. But it also can be a bit of a warning. It's like, well, if the whole market is being held up by 20% of the stocks, if those guys catch a cold, then this whole thing can see a pretty big move to the downside, or at least a slightly more protracted move. So it is warning signals.
Yeah, no doubt. Well, I know we kept you a lot longer on the show than you've probably anticipated you'd be here, but this was great information. It really was. And like I said, I hadn't seen this since you were on the show. We did the show together a couple of years ago, and so it was nice getting an update. It looks to me like it's looking pretty good. I mean, yes, we're at high levels on this, the last chart that you showed here, but I think it's telling us that the underlying strength of this move to the upside continues to be. We're continuing to see wide participation, which I think is a good sign.
Yeah. And in some senses, you'd rather in these sorts of charts, you want to see a nice boring chart. You don't want to see things flipping around like we did here in 2015, 2016. I think that's at the time when you and I were talking about this, the way we created some of these charts, because it was a case of we're seeing some wild moves, and what is that going to do to our average? We did get a bit of a pull down, but having at this point, 2009 wasn't too far out of our memory. So we were all a little bit more interested in seeing some widespread deterioration. So we were paying a bit more attention to it. But this is perfect for what you want to see now. You want to see just a nice, steady, calm, predictable March.
Yep. I think this also really confirms why we do what we do, looking at technical analysis, because it's not just about what the S&P 500 is doing. It's, kind of opening up the hood and looking underneath and finding out, what's driving the market to the upside, and is there wide participation in those sorts of things. I think this is a great chart to kind of keep an eye on.
Great. Let me just confirm. I'm pretty sure. Nope. We got one more. New highs, new lows. This is the number of stocks having new highs versus the one having new lows. Again, 2017, almost all up in the top above zero. Had a couple little dips down, but if we go back again and say, look at our previous range, look at the difference in volatility there. 2015, 2016, minus 1,400. We were getting into the minus 500s. Last year, we barely cracked minus 100, and we were in sometimes the upper range. So new highs, new lows. Again, 2016 from about March on, we've been in a nice steady uptrend, and I don't see anything that looks like it's going to knock that over.
Yep. Give us some more of that boring action. That's what we want.
Exactly. Mm-hmm.
No doubt about it. Well, this was awesome having you on here, Bill. Really appreciate you coming by.
Thanks very much, guys.
Yeah, we'll have to do this again sometime.
Happy New Year to everybody.
Yes, you too.
Happy New Year to you. All right, there he goes. That was a very interesting segment. And I think initially Bill thought he was coming on here for 5 or 10 minutes, but surprise, Bill. This is what we do on Market Watchers Live. We don't let you go.
That's right.
But anyway, we got a couple minutes, Aaron, before we get into the 10 and 10. I thought maybe you might take just a couple minutes and go through a couple of the scoot movers with everyone.
Yeah, I want to show also how you can view them differently. Some of our members probably remember this from previous when I've gone through these. So, all right. So here's our homepage. This is where you can get to your scooters, and you can look at them, obviously large cap, mid cap. There's a lot of choices here. I typically just leave it at large cap, keeps those cats and dogs out of there that I don't want in here. So these are your top 10, but what you might want to be watching, what we usually watch, are the top up and the top down. And once you see what your top 10 are, you can come down here and take it into candle glance. So these are the top 10 movers, but are they really that great? Is that what I want to look at? Is there really some improvement here? Is there something interesting? And so, for example, I'm looking at Noble Energy. You can see a pretty nice breakout. It looks like a flag. So I'm going to click on that just to take a peek. There we go. So, you've got, at this point, I'm looking at this. I see like a double bottom or a cup, and there's your pullback. And now we're shooting right up So there's your scooter. It's the big mover. Scooter is the big mover on this chart. So anyway, it's now in that hot zone above 75. So this is how you could maybe go in there and look. We were talking about energy being heating up again, no pun intended. And so now you can see that breakout that way. But I find that useful, but you can also do the RRG. And I do like this. I haven't actually looked at this because these top 10 movers change. So I'm seeing this for the first time, just like you. So this is a longer term look. Since we're talking about a shorter term space, when we're looking at these scooter moves, this is where you can really find some of those, great ones. Now look, the one I happen to pick because I like that breakout is in the upper right-hand quadrant. It's about as far right as you can go. It's still heading in that northeast direction, which is what you want to see on these. You can see Ulta making that move back into the leading group. But they are on this, they're all getting these really great moves on the scooter. But look at, for example, RCL and come down here, MDT. All of these are looking pretty sour, IBM. So even though they hit that scooter list, I like to look at the RRG just to give me a feel for what is doing the best and what's not. So for example, if I go back here and I look at RCL, and here we go. There you go. So this one, if you recall, was probably, well, it was the one that was not looking so good as far as the RRG. So we can take a peek here. We are getting a breakout after a bounce off of this pretty long-term, intermediate term support level. It looks pretty good. You can even bring it back here to these tops. And we're getting that bounce off of it. So despite it being in that sort of wrong quadrant, a lot of times you want to see these stocks as the momentum is changing. And today, of course, with that breakout, the PMO is ticked right back up. But, I think that's a great way if you wanted to just sort of look at what are the hot stocks right now. But you can also go look at the dogs. I'm not going to go through them, but I know somebody requested Love Southwest. So it'll be an interesting look. These are the ones that are currently moving in the wrong direction very quickly. So I just wanted to show people how you could do that. And at this point, we're looking at as far as top down, and you can hover over these symbols. Macy's is having the biggest downside move as far as its scooter. And, you can see Dominion Energy. This would be a concern to me because if you're looking at an energy space that maybe is supposed to be heating up, look at that chart. Not good. Gap down below that support level. So I think these are useful. And with that, I think we should get to the 10 and 10 because I know we're going to run a bit over unless you're just really fast.
Yeah, I'll try and pick up the pace. But that NBL that you looked at, I mean, that's just kind of the poster child of what we've been seeing almost day after day, week after week in the energy space, where one stock after another is turning the corner, reversing those downtrends. I thought that NBL chart looked a lot like Halliburton, HAL, where we had the reverse head and shoulders going in and nice breakouts. And Halliburton hasn't slowed down since. So definitely, you can use those scooters to identify some great trading opportunities. Without going through the scan engine. I mean, a lot of that's already presented for you. So great. That was a great analysis.
Yeah, we were going to look at the Nasdaq 100. We didn't quite get to it, but these were the top 4 I know you had to look at, Tom. So I will put this in the recap if you wanted to go back in and look at these particular symbols. There you go.
All right, sounds good. I'm going to go ahead and grab the screen, and we're going to jump into the 10 and 10 segment.
10 and 10 to 1. All right. So the first one, of course, was going to be RF, Regions Financial.
All right. Well, I love the financials. Beautiful move up. It's gotten ahead of itself, obviously, so you can kind of see the RSI had moved up above 70, and it's a little bit extended, but I love the chart. It is starting to flash one warning sign, and that is in the form of a negative divergence. So if I was looking at it, it's not one that I would rush into. Not that it can't go higher. These negative divergences do not always print a short-term top, but they are at least worth considering when you start to see this move, price moves to the upside, and especially at the very top here, it looks like the volume was dwindling. So not only are you seeing slowing momentum in terms of price action, but it also looked to me like we got some slowing momentum in terms of volume on the move to the upside. So I wouldn't be surprised to see maybe some sideways consolidation after a really nice advance. But anything back down close to the, if it goes below the 20, there's a chance we could hit that rising 50-day moving average. And I would certainly be interested in RF at that point.
Okay. The next one we're going to look at is USO. And I can tell anybody who's interested, I did write about it. Well, I know Carl wrote about it last Friday. Personally, I'm bullish on USO at this point. It broke out to new highs. It's looking pretty good.
Yeah, I'm going to go with a 2-year chart just to show a pretty significant area of resistance. I mean, this uptrend's been beautiful, but anytime you get to an area where the market, where we've seen sellers in the past, makes you a little nervous. And so there was a pretty big top, pretty important top off a beautiful uptrend back in 2016, the middle of 2016. So about 18 months ago, and we are rapidly getting there, and we're doing so with overbought conditions. So I like USO. I think that this is in a really nice uptrend, but we're very overbought and we're at a major resistance level. We're quickly approaching one. So I would be tempted to take my profits and see if we can get through.
All right. Yeah, I don't know. The person asked whether they'd lighten or add at this point. I would hold personally, and I would look for that a drop below 12, a decent drop below 12 would be my stop level.
Yeah, my strategy would, I just don't add. First of all, I don't like to buy when the stock's overbought in the first place. I'd rather get it when it pulls back. But here, knowing that we've got overhead resistance, and this doesn't mean we're not going through it. I'm not trying to say that, I'm guaranteeing that we're not going to go through 1250, but just knowing that there could be technical sellers at this level, I would be adding right beneath it. But that's my, my own personal style.
Yeah, exactly. All right. Next one is LUV, L-U-V, Southwest Airlines.
All right, LUV. Well, LUV is maybe falling out of favor here a little bit right now, but in the near term, but it's had a huge move up. These airline stocks can be incredibly volatile, and with rising crude oil prices, it's going to be interesting to see whether or not the increasing demand offsets the additional cost of higher fuel. But so far, I would say, the chart looks pretty good. A couple of areas on the pullback that you could watch for. We broke out above that July high here just a few weeks ago. And notice that the rising 20-day moving average is almost exactly where the price support is as well. So as we pull back, I would look for some strength coming off of this rising 20-day moving average. So I would be looking at the 64 level as a pretty key short-term support for Southwest.
Okay. The next one we talked about before, and the chart is really volatile right now. Long Island Tea, LTEA.
Oh my gosh.
I know, right?
Yeah, this is a company that was selling beverages and now has become a blockchain company. My guess is that $8 level is going to be a very difficult area to get through. So if I was in and I saw this pullback and I, bought because we were getting close to the 20-day moving average, and I saw this kind of a rise, I would be so far out the door. First of all, I probably would never have held this long. It probably would have gone up 20 cents and I'd have been scared to stay in it just because of the volatility and all of it. But this reversal here and movement back up, I think that open after the announcement is going to be a really difficult level to clear on a closing basis. So I think anything up near $8 for me is a sell until we can get a technical breakout above it.
Okay. Let's see. The next one is ever popular and another chart that we look at fairly frequently, GE. It's got a little bit of a breakout right now, but I know, gosh, there's just so many more stocks out there that are better than this.
Oh, yeah. We're getting a breakout, but I think it's a temporary breakout. I think that the reaction high we saw at 1850, I was actually looking at this yesterday when it got above the 20, and I was thinking this thing's got a shot for $18.50. And so where I think it's going to have the problem is that reaction high that we had at the end of November, right there at 1850. Also, the 50-day moving average. Keep in mind that as we were drifting lower and putting in lower closes, MACD had turned way higher. So that only accounts for price action. So it's telling us that the price momentum is slowing to the downside. But to be honest, how could it not slow? I mean, if it continued at the pace it was going, GE would have been out of business in about 3 or 4 more months. So it had to slow. And I think that this turn back up in the MACD was simply a function of the fact that it had to turn higher. It just couldn't, a stock can't go down or can't go up. So, at such a level for a long period of time, it's just not a sustainable move. So I think that we are just consolidating a longer term move to the downside. I think this is all part of a bear flag. And I'll be really surprised if GE closes above that 50-day moving average. So I would be selling this move to the upside. I'm just not a fan.
Mm-hmm. All right. Let's see if you're a fan of Navistar International, NAV.
Well, I can tell you without even looking, I am a fan of it. I was looking at it earlier. Don't own it, but this is one that I could own very easily if it would give me that 20-day test, which was what I was watching for. I think this is a really nice looking stock. I love the fact that it broke out. I know it's on my strong earnings list. It broke out with heavy volume after they reported great results, top and bottom line. I think they've got a really nice uptrend in play. But what I was looking for was the 20-day test and gap support. There are 2 levels that I really like the stock at if we could get it. One is right there at that gap support. So it gapped up with earnings, printed that black candle, worked its way all the way back down. Nearly, I can't tell if it touched. It looks like it came close a couple of days after earnings and then turned back to the upside. And then that second entry is that 20-day moving average, which is just slightly above gap support. So I think we've got some really good support on NAV between 42 and 42.50. I think if it were to close much below 42, I'd be real careful, especially if the volume picked up. But I don't think that's going to happen. I think we have a nice uptrend in play here, strong volume trends. I'm a fan. I think the stock's going to run to 47. Are you there, Aaron?
Sorry about that. Okay, I'm back. Sorry. Genesis Energy, GEL. I mean, the PMO looks great. I would be looking for a pullback, though. And I never really like to invest in stocks that have a 50 that far below the 200.
Let's see here. Yeah, I mean, I don't like downtrending stocks. I do think because it's in energy and we're seeing one breakout after another, that I would not be surprised to see this one become the next breakout. I think it's got a beautiful bottoming head and shoulder in play. So if I just draw this price support resistance line, use this as the neckline, you can see a left shoulder over here, a right shoulder in December on the low, and a lower low in between, which marks the head. So a breakout above $24 on increasing volume actually would confirm a very, very significant bottoming pattern. So I think GEL is bullish, but again, we're right up against resistance. So I think getting in now might be a little too early. But I love the volume coming in here, coming off of that right shoulder. I think it's a matter of time before we get that breakout. But I would maybe see if I'd either wait for that breakout or I'd see if I can get a pullback maybe to that rising 20-day moving average.
Okay. The next one is for our Canadian friends out there. Bank of Nova Scotia, BNS.TO. I see a nice breakout from a declining tops trend line, and the PMO is turned up, which is good, but I know I'd be wanting to see it get above that gap support. Or gap.
Yeah, actually, I like the fact that it's uptrending. I like the space. So I'm going to be looking at a stock like this much more bullishly, maybe with bullish rose-colored glasses on. And I put, a stock that was downtrending. But again, I like the space. Right at the top, you can see the higher prices, lower MACD, and check out the bearish engulfing candle on the top. That is normally a very big screaming sell signal. If you're in a stock and you're looking for opportunities to sell, that would be one that would just scream at me every time. Since then, we've gone to the 50-day. We've kind of held on to this price support area. I think that this trend line is breaking. Volume was not light yesterday. I thought it was pretty decent. I think this one's starting to move back to the upside again. I think we're in a range between 80 and 85 or 84 and a half. But I think we are going to see a break above 85 or 84 and a half before we see a breakdown below 80. So I like BNS.TO.
Okay. The next one, Control 4 Corp, which is CTRL. The PMO just went into negative territory, but that support level is holding.
Yeah, I think this one's got some pretty nice volume trends. I kind of agree that we got that trend line that's been in play now for the past 6 weeks or so. So if I draw that on here, so right here is where I'm looking, and I like to draw closes, but you can kind of see we're right up against what appears to me to be pretty big resistance. I think we've got a little triangle. I prefer ascending triangles in uptrends as opposed to descending triangles, but triangles are, for the most part, continuation patterns. So I think if you get a breakout above 31 here with increasing volume, knowing that you've got great volume trends in place to begin with, I would be pretty bullish this one. So I think we're going to get a breakout eventually to the upside. I think if you fail to hold this, 29 and 3/4 area on a closing basis, I think it does open up the possibility for a trip to 27. So I'd be careful how far I held it to the downside, but I think eventually we're going to make another run for that 36 area.
Okay. The last one we have is Amgen. And actually there was a comment on it that they had kind of a bad experience. They bought it on the 20th of December and then got stopped out on the 29th. A move from like 178.25 to 174.96. And of course, they're wondering what they did wrong. Why did that happen? I don't, we all know that sometimes you don't do anything wrong and it just doesn't go your way. But what do you think?
Well, for me, this is a perfect case of a stock that maybe was looking like it might have a head and shoulder top, but we're in a bull market and we're in a space. We didn't quite get all the way back down to this low, but got close. So maybe we'd have a little bit of an uptrending move. But this could have been viewed maybe as a left shoulder. This is a head, neckline, right shoulder, and we're starting to drift back down. But I would have been thinking all along we're in a bull market. I think the biotech space still looks really bullish. I think biotech's going to have a big year in 2018. And so I would have been looking for this to resolve itself actually bullishly rather than bearishly. And I think that today's action is clearing a pretty significant trend line resistance area. If we connect these highs coming down here, you can see we've had multiple tests, and yesterday's close followed up with today's move to the upside, I think suggests that we could be moving up to test that 190 level again. So I think the stock looks really bullish. Certainly sorry that you got stopped out of it. A lot of that noise at the end of the year, and I saw this in a lot of different stocks. The market wasn't really moving. Keep in mind, too, that there's hardly any volume. And if you look at Amgen's volume during this period as it was moving lower, there was really hardly any volume to confirm anything bearish on the chart. So I would probably, I'm trying to search for things. I mean, if you were using the 20-day moving average, I think there were a couple of price support levels maybe that you could have looked at. I think here was one where we had more volume coming down and we held at about the 173 area. Came down and tested it, but we held on light volume. That would be something maybe to look at. The other thing, too, sometimes is I like to take a step back and look at the weekly chart. And I think if you look at a weekly chart on Amgen, you'll see a big rise into 2014 and sideways consolidation. And I believe we are now in a pretty solid uptrend on Amgen. I think as long as we hold that rising 50-week moving average, I would be, from a longer term perspective, I would continue to hold Amgen. If we are truly in an uptrend, you can see what happened back in 2013, 2014. We really never broke down below that 50-week moving average, and you can see you could have held it for a long time. So it depends on your trading strategy. I'm more of a short-term trader, but from a longer-term perspective, I think Amgen looks good, and it would actually be one of my picks for 2018. I think that this is going to be a strong stock.
Yeah, I would get, just looking at those prices, I would say that the stop was a little too tight. Really, I would have set my stop, if we're talking about you got in back here, I would have set my stop not at like at 174. I would have had it all the way down here to that 172.50 area. So,
You don't have the chart up. I don't know if you were showing anyone like prices.
Yeah, thank you. That would be pretty useful for everybody to be able to see what I'm talking about.
And it depends on strategies too. I mean,
yeah,
you're more of a intermediate term, have
exactly.
a longer term mindset, no doubt.
That is true. But I know that would have kept me in by having that stop a bit lower. I hate getting stopped out too as much as anybody, but at the same time, I'm so many times I'm grateful. So, but I think that would have been something that I would have done differently than what they did.
And I think probably just looking at the chart there that you have up there, I think there was just some impatience. I mean, to be honest, because when you look at the chart now and you look back, you see hardly any volume. I mean, I'm looking for something that really is breaking down and there's massive. Well, it doesn't have to be massive, but I have to see a pickup in volume and distribution to the downside, to really start to, and we're going to get into the anatomy of a trade. I have one that maybe was somewhat similar to that. And I ended up getting out yesterday and the stock was bouncing back today. So maybe, maybe that'll help a little bit as well. I mean, you have to make your own calls and what makes you comfortable. And if you had set a stop and you said, hey, I'm not going to hold this stock if it goes back below the 20-day moving average, or if I'm not going to hold it if it goes down below a certain price level, then I think you stick to your principles. And if it turns out that the stock, didn't work out for you, and you typically have a pretty good track record, then I would just chalk it up to that one didn't work and you move on to the next one. Now, if you're struggling with multiple trades, and then maybe there's something that you're doing technically that's just a little bit out of whack. Maybe like Aaron was saying, you give it a little bit more room and look for a key price support. But
yeah, I'm looking at this 2-hour chart too. I mean, you have that. Well, this is a 2-hour chart, so it's not. It's the longer of the EMAs, I guess is the best way to put it. And that would have probably been a good area if you bought in here. Hold on until it came down below that. So I can see where your 174 area, kind of made sense when you're looking at this short-term chart. And I think that does speak to what you were saying, is that if you're a shorter-term trader, you're it's different as far as what your targets and your stops are, I would say.
No doubt about it. Well, I know we've got the anatomy of trade that's going to come up in a bit, but before we get into that, I know you've got another market update.
Oh, yes, I do. Time for our final market update after all here. Well, I'm in the right place. Let's go to our homepage. Definitely the best place to start. We already looked at our headlines for our first market update, but as you can see, as far as our predefined alerts, we've got quite a few, and so many so that you really need to view all of them. But you can see all of these new all-time highs being set, energy, BPI, moving up healthcare. So we can see there is a lot of participation at this point in the current rally we're looking at. So I'm going to go back, though. I want to look at the candle glance so we can see if any of those chart patterns are resolving in a different way. All right, so here we go. Dow came back up, and remember, it had given back about half the gains, but it's now back up to testing intraday highs at this point. And we can see S&P 500 continuing to make all-time highs. We're going to have to see if it closes any higher than this, but at this point, we should have a new all-time high, of course, for the day. Nasdaq, nice move upward. It's been consolidating mostly, but notice the Russell 2000, when we had our first update, it was in the negative. It's managed to bounce and is coming back up, is now up slightly. Wilshire 5000 also up. We've got Treasury yields still down somewhat, reading at 24.43. UUP gave back about half of its gains, but it does seem to be finding gap support right here at about that 23.98, 97 area here. And we've got commodities moving up nicely. We're still looking at a rising wedge, but I think we're going to be okay for the rest of today. And with USO starting to look at its intraday highs, currently reading at $12.30. And we can see with gold down slightly, and the VIX continues to move down. We now have a reading of 917 on the VIX. Declines are actually leading advances at this moment in time, which is an interesting look. All righty. Now let's go quickly to our market summary. I do want to show you where we are at as far as our spiders and industry groups. As we can see, let's get this organized properly. All right, energy and healthcare are at the top. Utilities are the only spider in the negative currently, down over 1% now. Industries, we're looking at oil services, oil, biotechs, not a surprise when you start seeing those moves on USO. At this point, the laggard is the utilities as far as our industries go. And again, not a surprise when you see that utilities ETF down so much. Internationally, we're looking at Russia and Singapore leading the list, and the laggards, we've got United Kingdom. We're now seeing Spain and India joining in as far as the laggards moving downward, but everybody else is up at this point. And with that, I will conclude our final market update.
Great. Sounds good. Now, I know we're going to get into the anatomy of a trade. And I know, Aaron, you had mentioned you've got the screen, and you had mentioned that you have one that you're actually.
I actually have one, yes.
And
yes.
So what do you got?
All right. I'm going to go. And if you all recall, back in late October, I recommended as a Monday setup Etsy. And I actually convinced myself that it was quite a good trade. And so that's what I got into. So I pulled up, and let's see here. It's a daily chart, but we're looking, in this last half. So when I bought it, it was October 30th. So it was right here. And the reasoning, we had a 3-day move to the upside of the PMO in near-term oversold territory. I say near-term because, your PMO is going to fluctuate from the positive. And in this case, it looks like we might even have, I'd have to put it to a long-term chart, but I don't want to mess this up. So, but, when you're looking at a low on the PMO and it's just below zero, and the crossover buy signal happens above the zero line. These are all things that that interest me when I see this stock. So I got in here, and when I got in, I set my stop. And like I said, I am an intermediate term trader. And I set my stop just above $16 here at this support level, because I felt like if it came down that low, that would be when obviously I'd want to get out. And I really got very close here twice toward that stop. So I was able to stay in at that point. So I did. We got the breakout, which was awesome. I was really happy with this trade. I hope somebody else out there got in as well. And so my target when I bought back here in October was about $20. And I'm trying to remember why that was my target. And I don't remember exactly, but I can't remember. But in any case, that was where I set my target. And, it came up there and it did hit that target. At that point, I opted to stay in and ride it through. I am still in. And so my new stop, I actually moved it up because now I want to preserve my my profits. So I moved my stop up. I'm going to be watching, really, it's not a hard stop. I don't have it in my account as a hard stop, but I'm watching that 20-day EMA. And of course, if we get that dip below it, that would put us below that 1995 area. So I think that would be a pretty good area. Now, a lot of people say, oh, well, don't you use the PMO to get in and get out? Well, I don't usually use it as far as getting out. But certainly, I'm looking at this chart right now, and I can see that we do have a PMO sell signal that is executed as of right now. We'll have to see if that sticks through. So that's also probably a warning, but I think with the strength of this rally move, I think a bounce off that 20-day EMA is perfectly reasonable to expect at this point. But that was my anatomy of a trade. Actually,
go ahead.
Yeah, go ahead.
No, I was just going to say, I think that this is a perfect example, though, where, you have primary indicators, but you also have some other indicators that you follow. And when I look at that based on, how I know you look at the charts, on balance volume still remains pretty strong. I mean, even though you pulled back, that's holding up. Your scooter's still at 88, so you still got one of the strongest stocks.
Mm-hmm.
Its peers. and price action has been very strong and so far holding its moving averages. So yeah, I would agree with
if you
you.
look at it here too, the OBV bottoms are still rising, and the price bottoms have been mostly, even here. So I think that's a positive divergence. So I think there's still some more to eke out here, but I obviously am very happy with how this one resolved. And every now and then, and I don't invest in too many, so it's nice when I come up with one of these setups and we all talk about them, and it just looked good right before the Christmas season, etc. So anyway, that was mine, and I want to leave you some time.
Yep, I am so looking forward to a year from now because I think we are going to we're going to watch you evolve into a short-term trader right before our eyes.
I can't stay glued to that screen that long. I can't do it.
Oh, well, I don't know. You start having some success doing it, you might be able to stick to it a little bit longer. Okay, let's take a look at a couple trades. This one is really driving me crazy today. SPW, SunPower Corp. You can see that it has kind of reversed its action today. What I liked about it, first of all, it's on my strong earnings chart list. So it had broken out with some really nice earnings. I think that was back in November. I think it was this move when they had their earnings on this downtrend. It may have been, I'm not sure which one it was, but it's on the list. It's beaten top line estimates and bottom line estimates. So it's beaten Wall Street's revenue consensus estimates and the bottom line earnings per share as well. And technically, I just liked the fact that it had broken this downtrend and is part of the renewable energy space, which has been on fire. So all that combined, it was one that I was really watching. And just recently, when it came down and tested this area of price support and that 20-day moving average, I got involved in it. I was watching gap support to the downside, and I continue to look at that along with the rising 50. I mean, now that the 50 is getting close to gap support, I probably will use the 50 as my stop on a closing basis. And I was looking for a move up to 950. Now, earlier today, the stock, I was doing pretty well with it, and it got up to about 918, has pulled back. Of course, now it's near the low of the day. And when I just looked a few minutes ago, I saw that the renewable energy space actually topped or hit an area at 107.50 where it had topped back in the early part of December, the second week of December. So, I mean, looking back, and this gets back to what we were talking about earlier, I mean, hindsight, sometimes it's a lot easier to look back and say, oh, well, I was hitting resistance on the index, probably should have taken profits on the stock. And since we've now pulled back, but I'm staying in the trade for now. This one is particularly volatile. So, that's kind of unnerving me a little bit because I normally don't like to get into these stocks that are so volatile, up 6% one day, down 7% the next. But again, hindsight, I could have taken a really nice profit earlier today, didn't do it. And so we'll see. But for me, it's really about gap support in the 50-day to the downside in 950. You can go across here and see that 950 has been a pretty interesting area of resistance. So anything close to that, I would be out of the stock. A couple other trades. Now, there was two. I think the last time we did the anatomy of a trade, I went over a few of my trades that were either in process or I think I'd closed out. But there were a couple that I gave that I had just gotten into. And one of them, I believe, was F5 Networks, FFIV, and I'm still in this one. The thing I liked about this, first of all, the MACD looked awesome, pointing straight up. That's telling me that on this move to the upside, we've got tremendous price momentum to the upside. And when that happens, a pullback to the 20-day moving average is normally what I look for. So I actually did get into F5 just above the 130 level. I'm looking for about a 135 and a half. We got as high as 134.85 today. So I'm just looking to get back up to that resistance area. I actually like the chart, and I would not be surprised. I think this is a bull flag. I think eventually it's going to go higher. But my strategy is to take the short-term profits when we get to resistance. So that's what I'm looking for there. To the downside, I think the rising 20-day could be used as a stop, or you've got price support at 130. I'm hoping not to get back down. I'd hate to see this turn into a loss, but I will definitely keep a fairly tight stop. I won't be in it much below 130 if it were to turn back down. Another one that I actually sold yesterday. And of course, again, hindsight, I would have held. But, we came back up and you can see these tails up above these moving averages. and it was hitting a trend line support. I mean, this is SBA Communications. It's a wireless company. Had great support around 157, 158 right in here. So I was able to get in at a pretty good price. It was starting to make its move to the upside. My original target was up around 172.5. But when it failed at this downtrend line, you can see the MACD still below the center line. And then that candle, we kept putting in higher highs and higher lows. And then yesterday, that just kind of spooked me, seeing that move back down below the moving averages. So it's one of those where I went ahead and took a small profit rather than risk any more. I didn't want to go back down to that 157 level. And of course, it gapped down today, but it's been rallying back. And even though the volume looks weak on that move yesterday, I think if we shorten it, get rid of this candle. So let's just go back the last 3 months. You can see that the volume had picked up on this reversal off of what we had seen into the end of the year. So just the combination of all that, failing at the trend line, failing at the moving averages, that's why I decided to just take a small profit, move back to the sidelines. And of course, it has come back to bite me today. But that's okay, because the way I look at it is it's given me the cash availability to get into another stock that I really like. And the other thing I would, you look at sometimes is looking at this chart yesterday. Would I have been a buyer of that stock yesterday? No way. So I look at it as though it gives me an opportunity to find something that I like better technically. So I try not to look back. Let's see, we got just a couple minutes here. All right. You have grabbed the screen back, so we're going to wrap that up.
Yeah, I figured we should.
Yeah, I had one more. I'll just tell you, without looking at the chart, but one other stock that I did just get into at the end of December was Becton Dickinson, which is BDX. And I think if you look at that chart, you'll see that there was some pretty important gap support that was being hit last week, and the stock is rebounding. So that one looks pretty good to me, but we can talk about that one again during a future anatomy of a trade. So there, we have recapped the stocks that Aaron and I went over in the anatomy of a trade. And let's take a look at just a couple of quick questions. Aaron is giving you the upcoming schedule, which I'll get into here in just a moment. But there was a question that had come in earlier, and I thought I had jotted it down. Yeah, I did. It was just a question about regional banks. And that came in through the survey responses. As we mentioned, we do go back and review all those. Question had come in just asking about the regional banks and talking a little bit about the treasury market, and what that could mean for the regional banks. My feeling is that we're going to continue to see rates rising in 2018. I think that's very bullish for banks, life insurance companies. I like the regional banks. I don't expect that they are going to outperform the market or the overall, a lot of the other areas. I think there are going to be other areas that will go up maybe a little bit more. I don't usually look for the banks to be like renewable energy, where you get these explosive moves, or semiconductors, those types of industries that are very volatile. We don't typically see that with banks. So I'm not looking for an explosion to the upside, but I do think that this is a group that will perform well. If you're interested in regional banks, you can look at the KRE, which is an ETF that follows regional banks, and an index that you could follow is $KRX. Those are a couple things to look at. But anyhow, I thought that was interesting. There was a question also that had come in asking about how, first of all, there was a lot of appreciation from many folks about the recorded segments that we had done over the Christmas and New Year's holidays while Aaron and I were off. And questions came in, how can they be accessed, now that they're kind of history. Just keep in mind that is all over at our YouTube channel, and that's what Aaron is showing you here. If you go to YouTube and under the search, hit StockCharts, and then simply click on the StockCharts channel.
You've got a problem.
There we go. You can see that as she scrolls down or looks at, they're under the videos, you'll see that all of these show up from last week under the videos area. So you can go back and take a look there to find them.
You've got a problem.
I keep getting that.
That's all right. So anyway, just wanted to point that out so you could see how, you could get to those different areas, some of the, the Market Watchers live shows and the chart school and all the different things that are available at YouTube. So make sure you check that out. I know it's time to go though, Aaron. Any quick final last thoughts?
Oh gosh, I'm really surprised, honestly, to see the market continuing higher right now. My indicators were looking really soft, and I'm still surprised. I would have expected this week to be more flat, and so far, heck, we're making new all-time highs. So can't argue with that at this point.
No, and John Murphy had written about, the Santa Claus rally continuing through January 5th historically. And I'll just, with my final thoughts, just say that the beginning of almost every calendar month tends to be very strong for the stock market because you got a lot of money coming in, a lot of pension plan money. You got a lot of 401k money where companies have accumulated their employees' withholdings through the end of the month. They send them all off to the vanguards of the world, Fidelity and so forth. And that money has to be put in the market. They don't grab that money and look at the market technically and try to decide when to put it in. That money automatically gets invested. So I think anytime you're heading into the beginning of the month, I tend to view it very bullishly. And so I'm never surprised to see the beginning of the month, the market moving higher. I want to thank everybody for joining us today. Especially I want to thank Bill Shelby for coming in earlier. That was a great presentation that he did for all of us. If you came in late, weren't able to catch that, you may want to go back and look at the recording. That is certainly something that I think will benefit you. Aaron will conduct a workshop on decision point scanning on Friday of this week. And next Wednesday, Bruce Frazier will be back making a return visit to Market Watchers Live. So we're looking forward to that as well. I want to thank everybody for stopping by today. Really appreciate it. Please remember to complete the survey as you exit. We love to get your feedback, and especially if you're new to the show, we like to know what you think of Market Watchers Live. If you have suggestions for future shows or questions that maybe we haven't answered, feel free to send those along. We'll try to use those in future mailbags and so forth. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everyone. We'll be back on Thursday. Happy trading.